Greetings guys, and welcome to Crypto Unlocked. On Wednesday, the price of Bitcoin surpassed $24,000 in part due to a surge in tech stocks as investors become increasingly hopeful that inflation may moderate and that consumer spending would stay robust. It still leaves people wondering how long will Bitcoin continue to rally. Before we get started, please be sure to like the video and subscribe to the channel so you don't miss out on any of our future videos going forward. Number 4, what's the market like? Since its bottom in June, Bitcoin plus 7% has rallied beyond $23,000 and traders are starting to think that the bear market is gone. On the other side, Ethereum plus 3.9% has outpaced Bitcoin, increasing over $1,500 since the June low. What do the basics show? The number of IP addresses with more than 0.1 Bitcoin but less than 1 Bitcoin has been growing at a parabolic pace with a noticeable spike while Bitcoin was trading at a $20,000 level, according to blockchain analytics company Glassnode. In addition, a Cointelegraph post from June 20th said that more than 13,000 Bitcoin wallets have become whole coiners in the preceding week. This is a blatant indicator that despite the gloomy market and the abundance of fear, uncertainty, and doubt, according to FUD News that dominates the main news channels, regular Bitcoin purchasers or plebs have been stockpiling sats at cheap rates. The market value of all cryptocurrencies has risen back to heights above the $1 trillion mark. Midway through June 2022, the cryptocurrency market value was below $1 trillion and hadn't been able to surpass it until Saturday, July 16th. Positive emotion may increase market cap. Number 3, the recent momentum and its aftermath. Along with the liquidation of margin transactions and the failure of several cryptocurrency exchanges, the quantitative tightening carried out by the Federal Reserve Bank of the United States and other central banks has made a substantial contribution to the bear market in cryptocurrencies. Many observers were taken aback by the recent positive momentum of Bitcoin, Ethereum, and other cryptocurrencies since they were anticipating lower prices given the predicted continuation of interest rate rises. In recent weeks, a lot of Bitcoin stakeholders anticipated that the US SEC would accept Grayscale's proposal for the first US spot Bitcoin ETF. Gary Gensler, the chairman of the SEC, rejected the plan, citing Grayscale's inability to address concerns about market manipulation and the absence of an adequate structure to safeguard investors. Despite this blockage, many investors kept accumulating Satoshis, which increased demand for Bitcoin and raised its price. A potential merging date for the long-awaited switchover of the Ethereum chain from a proof-of-work to a proof-of-stake system was discussed last week by Ethereum developers. After the merger, it's anticipated that Ethereum's energy use would decrease by 99.5% and the production of new Ethereum coins will be reduced by 90%. In the hopes that the update would increase the value of the Ethereum ecosystem, investors have been collecting Ethereum at cheap rates. Number 2, how crazy is this surge? In addition to Bitcoin and Ethereum, DeFi platforms have seen significant gains, with Lido Finance rising more than 160% in the last week. The price of Avalanche's EDAX has climbed by more than 45% over the last week, while Aave, a cryptocurrency loan platform, has increased by more than 40%. The outcome of the next FED and ECB meetings may affect how the cryptocurrency market evolves. The markets for cryptocurrencies and the SP 500 equities continue to have a significant favorable association. The cryptocurrency market may have risen with the SP 500 index during the last month. A lower equities market and maybe a weaker cryptocurrency market might result from the FED accelerating interest rate rises by 100 basis points. The SPDR S&P 500 ETF has increased by 4.59% over the last month, with the previous 7 days seeing the greatest increase of 4.56%. Extra quantitative tightening as well as an increase in global inflation rates might put additional pressure on stocks, which would then affect the price of cryptocurrencies. We could still be in trouble. Number 1, will the surge continue? If you invest in cryptocurrencies, be prepared for ongoing volatility. Experts advise limiting your cryptocurrency investments to be less than 5% of your entire portfolio because of this. In a prior interview with Next Advisor, Humphrey Yang, the personal financial guru behind Humphrey Talks, said, "I know these things are highly unpredictable, like some days they may go down 80%, but simply don't check on it if you think Bitcoin has long-term potential. The finest action you can do is that." Before investing any additional money in a risky asset like Bitcoin, always make sure all of your financial bases are covered, including retirement funds and emergency savings. Also not new is Bitcoin's most recent significant increase. Although Bitcoin's price has consistently increased over the long run, Kiana Danielle, the creator of Investiva, notes that there's been considerable volatility in the meantime. Like Danielle, who asserts that she isn't jumping on the hype, investors should continue to hold and shouldn't be concerned about the volatility. The greatest thing you can do is to avoid looking at cryptocurrency, whether it's rising or falling. As with any conventional long-term investing account, set it and forget it. According to Yang, if you let your emotions take over, you can sell at the wrong moment or end up making a poor choice. You get anxious about it, and I don't believe that's a good strategy. And with that, we've officially come to the end of this video. Don't forget to subscribe to our channel and hit that bell if you haven't already so you don't miss out on future videos going forward. And if you enjoyed the video, then let us know by smashing that like button. And until next time, take care and goodbye.